Uncovering the truth, the real reason behind Genesis bankruptcy. Genesis, one of the biggest trading desks for professional investors in cryptocurrency markets, filed for bankruptcy, leaving many questioning what led to its downfall. Despite its popularity and innovative technology, Genesis failed to reach its full potential, and many are wondering about the real reason behind its bankruptcy. In this video, we'll dive deep into the events that led up to Genesis' collapse and examine the underlying causes that contributed to its downfall. We'll uncover the truth behind this once promising company's downfall and see if lessons can be learned from its failure. So make sure you stick around until the end of this video. Genesis Global Capital files for Chapter 11 bankruptcy, the latest crypto market shakeout casualty. Genesis Global files for Chapter 11 bankruptcy in the U.S., another casualty in the shifting digital asset market after FTX collapse. Genesis Global Capital, one of three entities under Genesis, has sought bankruptcy protection in the U.S. following the Chapter 11 filing by crypto exchange FTX. The lender has assets and liabilities between $1 billion and $10 billion and over 100,000 creditors, according to its filing in the Southern District of New York. Genesis Global HOLDCO, the parent group and lending unit of Genesis Asia Pacific, has also applied for bankruptcy protection. Genesis Global HOLDCO has $150 million in cash to support restructuring and has considered options such as a sale. The Chapter 11 process offers temporary protection from creditors while the company works to restructure its finances. Genesis derivatives and spot trading, broker-dealer, and custody business will continue their operations unaffected by the bankruptcy process. Genesis bankruptcy and job cuts amid the collapse of major crypto players. The latest bankruptcy filing is one in a series of crypto failures and significant job cuts caused by declined digital asset prices. According to a source, Genesis loaned $130.6 billion in crypto and traded $116.5 billion in assets in the past year, with Three Arrows Capital and Alameda Research as its largest borrowers. These companies, along with FTX, are currently undergoing bankruptcy proceedings. The debt owed by Genesis by Three Arrows was assumed by its parent company, Digital Currency Group, which has filed a claim against Three Arrows. DCG'S portfolio also includes Grayscale and CoinDesk. Crypto lenders acting as unofficial banks saw a surge during the pandemic, but unlike traditional banks, they don't need to maintain capital cushions. This has led to significant losses for lenders and customers due to a shortage of collateral. However, Bitcoin prices have risen since the FTX crash and are now trading above $23,000 after hovering at $17,000 following another collapse. According to Carol Alexander, a finance professor at the University of Sussex, the crypto market has already factored in Genesis Chapter 11 bankruptcy. It won't affect the ongoing Bitcoin bull run. Although recent events in the crypto market have scared many investors, they will likely reinvest in crypto once they see prices trending up, providing fees to crypto institutions in the process. And here's what we think about Genesis bankruptcy. The long-running public insolvency of Genesis finally came to a close when it filed for Chapter 11 bankruptcy protection. This outcome was expected and forecasted by many market participants. Genesis has been in negotiations with its largest creditors, including the WINKLEVOSS-LED GEMINI, for an out-of-court restructuring, but an agreement couldn't be reached. Only Genesis Global HOLDCO, LLC, and two of its lending business subsidiaries filed for Chapter 11, while the Genesis Global Trading Brokerage did not. This process allows for the negotiation of a court-approved restructuring of liabilities. The Chapter 11 filing aims to expedite the process of selling company assets, finalizing support from the parent company, Digital Currency Group, and striking a deal with creditors in 90 days. It's uncertain how the negotiations will end, but they're being closely watched. Based on our research and conversations with professionals on the case, we have concluded the following key points. Genesis bankruptcy marks the end of the forced selling of assets, particularly the Grayscale trusts. After the downfall of FTX, the unusually large discounts in the NAV, net asset value of Grayscale Bitcoin Trust, Grayscale Ethereum Trust and other DCG-owned Grayscale trusts has sparked questions about technical issues. The closure of forced selling was predicted to result in a bullish market reaction, and now that Genesis has filed, the proof is there. The liquidation of 5% of GBTC shares by Gemini in November, used as collateral for a loan, caused record-level artificial widening of spreads and was sold at 24.4% below the closing price in January the 20th. The halt of forced selling and DCG's decision to declare Genesis bankruptcy instead of raising capital for creditors likely removed the need to monetize the trusts, and over time, the Grayscale NAV discounts will converge back to the spot. The bankruptcy of Genesis is another example of the superiority of DeFi over SeFi in risk management. The bankruptcies of FTX, Celsius, Voyager, and other centralized financial institutions showed that inadequate risk controls, poor accounting, and chances of damaging fraud. At the same time, DeFi has successfully passed every stress test with its formulaic collateral, risk management, and on-chain data that make fraud almost impossible. The extent of Genesis' risk management failure was revealed on the first day of filings, with impaired loans of 3AC reaching $2.4 billion. DeFi's predefined rules would have foreclosed on the collateral much faster, potentially mitigating losses and avoiding insolvency entirely. However, the first-day filings reveal that Gemini could have been more rigorous about structuring and managing their relationship. The loan did not seem to have been set up under separate accounts and was uncollateralized before August 2022. Gemini's envisioned recoveries in the initial plan of reorganization also raises questions, as they are granted a different creditor class that separates them from all other Genesis creditors. In conclusion, public complaints about Genesis are understandable, but some of the mess can be attributed to relaxed loan structuring, counterparty operations, and other factors. And there you have it, guys. Thank you for taking the time to watch. If you enjoyed this video, don't forget to smash that like button and subscribe to be the first to get future blockchain, crypto, Web3, NFT updates and news.